Hi everyone, my name is Kevin Boland and I'm a farmer's insurance agent based in our beautiful San Francisco Bay Area. As many of you know, my specialty is insuring homeowner associations, and I am super excited because I have a brand new educational video for board members and hardworking certified community association managers. My topic is interior water claims inside a condominium. Who pays? And I chose this subject because in the last 6 months we've had a spate of these claims. And I realize that there is a lot of misunderstanding about when the association's insurance comes into play versus the condominium owners. And then what happens if the roof leaks, or what happens if there's additional units that are damaged. So I think you'll find it a very useful video. Okay, so now when it comes to property insurance for an association, we always have to look at the CCRS insurance section. There you'll find a brief description of what type of property policy you have in your association. And when you get there, you will find that there are only 3 types. There is what's commonly known as the walls out property coverage form. Number 2, there is what's known as the walls in as built by the developer property coverage form. And thirdly, there is the walls in and everything is insured property coverage form. So I want to give you a brief description of all these 3 different types because it's critical that you understand how they respond after an interior water claim, because once you do, then you'll know exactly who's going to pay. Okay, so with the walls out property policy, this means that the association's insurance will only pay for damage sustained outside of the unit or outside of the condominium. So a condominium owner has to have enough coverage to pay for all their interior personal property and all their interior building fixtures. And by building fixtures, I mean the kitchen, the cabinets, the hardwood flooring, the kitchens, the sinks, the showers, and the vanities, and the hot water heater, the furnace, the air conditioning system. And don't forget the wall paint, which is a very expensive type of building fixture. Trust me, I know, I just got a bid for one and my jaw dropped. So when it comes to the walls out property policy, a condominium owner has to insure all their interior building fixtures. Now the second type of property coverage form is called the walls in as built by the developer. This means now that the association's insurance can pay for new kitchens, new cabinets, new bathrooms, and everything else that I just described, except only at the same quality as was built by the developer back in the 60s or 70s. And when you read the CCRS insurance section, you'll read something like, we will pay for all the common area and the lots, and the residential structures as built. When you read those 2 words, as built, that means as built by the developer back in the 60s or 70s or whatever. So in this situation, a condominium owner has to have enough coverage in their individual condominium policy to pay for these building upgrades that have occurred inside the home. So the last type of property policy is called the walls in with everything insured. By far the most comprehensive type of property policy today for associations. This means now that the association insurance will pay for all the upgrades, all the building fixtures, and all the condominium owner has to make sure that they have enough coverage, building fixture coverage up to that deductible. Because let's say, for example, you have a $10,000 property deductible. If it's only a $6,000 interior water claim, the association's insurance, even though it's going to pay for everything, will not even come into play. Why? Because the deductible hasn't been reached yet. So if you live in a condominium and you have a walls in with everything insured, make sure you have enough building fixture coverage in your HO6 or condominium policy to pay up to that property deductible. Okay, so there's a brief description of all 3 types. So if you live in a condominium association, you may be asking yourself right now, well, that sounds great, Kevin, but what type of property policy should we buy for our association? Well, as board members, you have the right to choose. And there's pros and cons for 2 types. So let's say that you've had a lot of water claims because the toilet overflowed, sink was left on, or the hot water heater burst inside the unit. And all of a sudden you've had 3 claims in a couple of years. Your insurance your insurance premium is going to rise. And I've had this happen a couple of times, and boards have decided to go with a walls out property policy. That way they can let the homeowner pay for small claims, let's say under $10,000, but now, if it's a major catastrophe, the association's property insurance is still there. And by doing so, you eliminate those little minor claims, and therefore the insurance rates can come back down to normal again. And that's something that has actually happened several times with my clients. I insure over 40 associations today, so I've seen a lot. And then secondly, I've had a lot of boards tell me, well, Kevin, when people buy condominiums, they never read the insurance section of the CCRS. And they're busy and they have a lot going on in their life, especially young couples with kids. We know that they're not going to be properly insured, so we're going to make sure that they are. And on top of that, when they pay their monthly dues, part of those dues are paying insurance premiums. So some boards really feel strongly that they should insure with everything covered, all the upgrades covered under the property policy. And that's perfectly legitimate too. So it all depends on the board and what your unique situation is. I hope that helps. All right, so now let's take a look at one interior water claim and how the three different types of property policies would respond. I think after this, you'll really understand how it works. So let's say you have a 4-story condominium, and on the 4th floor, a hot water heater burst, and it floods 2 units below. It's a $40,000 claim, and there's a $10,000 property deductible. Who's going to pay? Number one, if it's a walls out property policy, the association's insurance is not going to pay a penny because all the damage was sustained inside the units. Who's going to pay for the 2 units below? Well, they have a choice. They can either go directly to the liability portion of the unit owner who caused the problem, or they can file their own insurance claim under with their own insurance companies, and you better believe those insurance companies will send a bill to the condominium owner who caused the problem. Now let's say you've got the walls in as built property policy. Who's going to pay in this situation? Well, if the deductible was breached, and it was only $10,000, so it was, the association policy can come in and pay for all the new building fixtures, all the hardwood flooring, all the sheetrock, all the paint that was damaged, but only with the same quality of fixtures that were built by the developer back in the 70s. So if a condominium owner, for example, has a granite countertop and beautiful hardwood floors today, the association's insurance will not pay for those upgrades. The condominium owner has to. But what about the 2 units below that were damaged? They're okay because they didn't cause the problem. So if their own individual insurance policy doesn't cover upgrades either, that's okay. They can go back to the liability portion of the condominium owner who caused the problem. And their liability insurance, by the way, as an aside, should be $1 million. I see too many condominium owners with only $300,000 coverage. Enough to pay a water claim, but what if they cause a fire? So I always recommend to my clients to have $1 million in coverage. Okay, so in this situation, the unit owners are covered, and the homeowner who caused the problem better have coverage for upgrades, because remember, with the as-built by the developer policy, no upgrades are covered. And then the third type of property coverage form, the wall is in with everything insured. Now the association's insurance can swoop in, they can pay for everything. They will send a one-time special assessment to the unit owner who caused the problem to pay and reimburse the association for that $10,000 property deductible. And most HO6 or condominium policies have coverage for what's called loss assessment. If you don't have it, make sure you do, because then the condominium owner who caused the problem can send the bill to their insurance company, and they'll reimburse the association for that, so they won't have to worry about paying that. Okay, so that's an example of how the third type of property policy, the wall is in with everything covered, would respond. So I hope that helps. 2 other situations real briefly. I can't talk forever. I wish I could. Let's say there's a windstorm and the shingles are blown open and water comes in through the roof. Who's to pay for that situation? Well, if the association is responsible for maintaining the roof, then their liability policy will pay for the damage to any units that have occurred. Now, what happens if there's a hot water heater that's owned by the association and it leaks over time? Is that a covered loss? It's not. Why? Because it's a maintenance issue. It didn't happen all of a sudden. For insurance companies to cover water claims in the interior, it's got to be sudden, it's got to be accidental. They will not pay for leaks over time. Okay, I think that's about all the time we have for today. I hope this was useful for everybody. Please send me an email or give me a call if you have any questions. I love talking insurance, as you know. And of course, if any professional out there would like to get a bid on your insurance, I continue to get fantastic rates with Farmers Insurance. Not only that, we have some new coverages this year that I'd love to tell you about. And you know, I've seen a lot of insurance companies in the last few years, because of the wildfires, non-renew their associations. They're abandoning them. I can tell you right now, of my 42 clients, Farmers has retained them all. We are not abandoning the California market, and I'm really proud about that. So give me a call, and I sincerely hope today that my tips and my advice on interior water claim, who pays, helps you down the road.